If you under-allocate to secondary markets, the secondary market opportunities tend to be bigger versus the cryptos. So it's the VC, because VC is over-allocated, so everything goes to high valuations quickly. It then falls into secondary. The secondary traders wait. They buy these things at a discount when the market's at the right moment, and you tend, I think, to get better returns. My view is the liquid will probably do better than VC for now until this structural shift changes. The only other big players in the markets, I don't know if you see it much, is
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. The Banana Zone is a highly anticipated event for cryptocurrency investors in 2024. This term was popularized by Real Vision. Entrepreneur and leader Raoul Pal, who provides a description, the Banana Zone is considered the peak period enduring every cryptocurrency bull market. Prices can experience extreme fluctuations. Raoul believes that the Banana Zone is impressive, concluding the complete shift from macro spring transitions seamlessly into summer and carries on throughout the season. The decline was caused by the actions of central banks injecting liquidity into the market. Injecting additional liquidity into their respective regarding economies, the transition has not been successful thus far. Hasn't gone as smoothly as anticipated. Instead of the substantial increase in prices that occurs during the Banana Zone, the cryptocurrency market has experienced recent fluctuations. Caught in the midst of the conflict that resulted in a staggering $6, a staggering amount of money has been lost in the global stock market. Analyzes and tracks the performance of leading cryptocurrencies in the market. Ethereum and Dogecoin experienced significant losses, reaching a point where they lost a considerable amount, experiencing a 27% drop on Monday and still awaiting a rebound. According to Raoul, these are fully indications of the monotonous areas stage. Prior to the Banana Zone, prices were experienced periods of stagnation or unexpected fluctuations. This is how the dull area is gradually becoming. As the end approached, my friend declared with certainty, "Get ready for the upcoming arrival of the Banana Zone. The boring zone is a precious gift and should be cherished. It's time to make some strategic investments before the market goes crazy, and you become overwhelmed and you attempt your best. It's ideal to approach it with a sense of excitement and enthusiasm and ambition, but please don't mess this up." My friend seems unfazed by the recent events. Observing the fluctuations in prices, it is worth mentioning that we experienced some significant changes. Significant declines were observed during the previous bullish period. Markets continue to operate without interruption. The almighty Banana Zone, in his latest video, please provide an update on the founder and CEO of Real Vision talks about the Banana Zone, and their everything in the code thesis is meticulously detailed. The intersection of the business cycle and the current surge in cryptocurrency prices and market liquidity. Anticipated contributions from central banks are set to drive swift price surges and economic expecting growth in the coming 12 to 18 months. Despite all indications to the contrary, my friend is confident that central banks are on the verge of release a flood of liquidity onto the after. Analyzing the markets, he becomes even more certain that that will take us to the Banana Zone. And according to projections, the crypto market is expected to experience significant growth, reaching an impressive $12 to $15 trillion by 2025. And lots of things Raoul Pal discusses, so please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
my thesis, it's a fund of funds. My thesis is that if you really want to capture the performance of this space in crypto as it goes from $2 trillion to $100 trillion, you're not going to get it all by being just in Bitcoin, Ethereum, or Solana. You're going to have to figure out what the next big breakouts are, where the big gains can be made, where's the next 100x. And that is incredibly complicated with the thousands of tokens that exist and tens of thousands of memes and all the other stuff in the space. You kind of need to rent it to experts. And these hedge funds are the experts. Now, what's interesting about the hedge fund industry in crypto for me is it's incredibly small versus the VC industry. It's about a fifth or less of the size, maybe a tenth of the size of the VC industry. There's actually not a lot of secondary market professional participants in crypto, which makes it very, very inefficient, which means it can be very profitable. So hedge funds can make supernormal returns. They focus all day, every day, 24 hours a day, 7 days a week, because it's crypto, on doing this. In traditional markets, there's about $4 trillion in hedge funds. In crypto market, it's about $10 billion, i.e. nothing. The big players who push prices around, some people would say the more manipulative players, tend to be the kind of private trading shops out of Asia. They're very big in the space. Then there's the market-making firms, people like, Jump Capital, who are now moving out of the space. But there are other market-making firms. And then there's some hedge funds, but a lot of retail. As retail investors, we got to front-run a lot of the money coming into the space. And that's been the gift that keeps on giving in crypto, is being ahead of Wall Street for once. So as a disclosure, Exponential Age Asset Management, XPAM, is an investor in your funds. So just so everybody knows that. But what I want to understand is, why is the hedge fund industry still so small? I mean, you're one of the biggest funds. There's a few others bigger, Alan Howard and a few others, but there's not, and the others tend to have a lot more mix of VC and other stuff in their assets. Why is it so small as an industry compared to the kind of 2.5 trillion asset class it is? Why is that? Because it feels like it's a place where you need professional capital to manage the kind of other stuff. Yes, sure, we can all hold Bitcoin and a few tokens, but when it comes to navigating what's the next big thing, it's not bloody easy.
According to Michael Saylor, the co-founder of business intelligence company MicroStrategy, buying a strategic reserve of Bitcoin would be a significant moment for the United States. He made the statement during an interview on TNBC on August 6th. A sailor whose company, MicroStrategy, owns around $8 billion worth of BTC, expressed strong support for Wyoming Senator Cynthia Lummis's proposed Bitsween Act. This act would require the U.S. Treasury to gradually acquire 1 million BTC, which is nearly 5% of the total cryptocurrency supply. In 1803, Thomas Jefferson made a significant acquisition by purchasing the Louisiana Territory for $15 million. This decision effectively increased the size of the United States. Meanwhile, there is a growing sentiment among experts that Bitcoin is a valuable and limited digital asset. It is considered a wise move to invest a small portion of one's currency or paper money into something that is projected to be highly sought after by billions of people in the future. Saylor has a strong belief in BTC and predicted that the price of the cryptocurrency would soar to around $13 million per coin. In 2045, during a highly optimistic speech at the Bitcoin 2024 conference, Soar expressed his belief that the event was a significant turning point for Bitcoin. He highlighted the presence of influential figures such as U.S. presidential candidates, governors, senators, and House members who showed their support for the digital asset. This has sparked discussions about the possibility of nation-states including Bitcoin in their balance sheets. If nations are considering buying Bitcoin, it seems reasonable for institutions, corporations, and individuals to follow suit. Soar has been encouraging investors to fully embrace BTC and allocate all available resources towards it, with the aim of achieving a substantial net worth in the coming decades. Saylor's remarks followed a significant downturn in the crypto market, which experienced a staggering $510 billion decrease in total market capitalization during a recent market crash. Bitcoin experienced a significant price drop of around 18%, although it has since made a partial recovery. It is worth noting that long-term investors have shown remarkable resilience, particularly in relation to BlackRock's shares. Despite the turbulent market conditions, the Bitcoin Trust experienced no net outflows on August 5th. Let's back to the Raoul Pal interview.
If you underallocate to secondary markets, the secondary market opportunities tend to be bigger versus the crypto. So it's the VC, because VC is over allocated. So everything goes to high valuations quickly. It then falls into secondary. The secondary traders wait. They buy these things at a discount when the market's at the right moment. And you tend, I think, to get better returns. My view is the liquid will probably do better than VC for now until this structural shift changes. The only other big players in the markets, I don't know if you see it much, is because we don't have that much professional capital. So there's a bunch of hedge funds, and the number of large hedge funds with anything over 200 million is, there's like 10. I mean, there's not that many, particularly directional ones, is the Asian trading groups. Those are often kind of murky private pools of capital. And they seem to be the ones who move size around. Do you see that? I mean, they seem to be the main traders, plus a couple of the market making firms. I mean, I think Jump's leaving the market, but there's Jane Street and there's a few others. One of the things that I thought has kept the lids on the market for the last 3-6 months, since it peaked out in March, was there's just an enormous redistribution of tokens out of old hands from the last couple of cycles into newer hands. So as you mentioned, there's Mt. Gox is one. So that was a long time ago, but they're finally coming to market. The FTX estate, that whole bunch of stuff had to get sold, took liquidity out because a bunch of hedge funds and family offices took up the liquidity, but it still takes liquidity out of the market. We've had the Germans selling distribution. We've had Jump liquidating a portfolio. We've had a bunch of token unlocks from these things, plus new supply coming and tens of thousands of meme coins. And it feels like there was not enough liquidity. So the market, I think, has done pretty well absorbing that by trading very sloppy sideways in the majors. Sure, the olds get crushed because they're getting replaced with these other
Bitcoin permanent holder addresses have amassed almost $23 billion of the asset in the last month, as per on-chain data mentioned in a post on X on August 7th. CryptoQuent's founder and CEO Kayum Ju expressed a strong belief that there might be some significant developments taking place behind the scenes. The comment was made in relation to a recent surge in the 30-day demand change for long-term Bitcoin holders. Approximately $22.8 billion worth, or 44,448 BTC, have been transferred to addresses held by long-term holders in the past month, indicating a clear trend of accumulation. Hello, Kai. It seems that there has been an increase in accumulation since the market slump on August 5th, which caused BTC prices to crash to $49,800. The asset has seen a 14% recovery since then, reaching $57,000 on August 6th. Additionally, the Bitcoin Fear and Greed Index has transitioned from extreme fear to a level of 29, which still indicates fear, but shows a slight improvement in sentiment. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.